Welcome back. Investor Mutual's Anton Tagliaferro is widely regarded as one of the best fund managers in the country, and that's why he comes on the show. So how is he playing the market right now? Anton joins us in the studio. Hello, Anton.
Hello, Pete. How are you?
I should say to the viewers, I've been trying to get him as positive and as confident as I can, but he informs me that he actually is an old accountant, so he's always going to be cautious. What are you seeing, Anton?
Look, Pete, it's tough, I think. I mean, the reality of the world is economic growth around the world, including Australia's patchy. The reality is interest rates are as low, very low, but they're not going to go up in a hurry. Yeah. So that's the landscape. So, rates are low because economic growth's not sort of effervescent. Yeah. And so companies are doing it quite tough, I mean, the bank results, we saw them recently. Yeah. Flat profits.
It's a long time since we've seen that, isn't it? Because they always were impressing, weren't they, every quarter?
Well, again, I think it's true and false. I think the last 2 or 3 halves, the bank's profits only went up because their bad debts were coming down.
And they're also cutting costs.
And then their bad debts are as low as they can go now. So, look, the banks are fine, but they can't, their profits. Resource companies have got their own issues with low commodity prices, which look like they're going to stay low for a while.
Yeah.
And then you look at other companies like your Amcors, your Telstras, your Brambles, which you'd necessarily buy, and they're on sort of 18, 19 times earnings.
They've done their hard work for us.
They're good companies, terrific companies, but they're priced as good companies, so you've got to be really selective to find value.
The fact that we're not really selling off aggressively, does that also tell you something like it might not be enough to induce us to go up, but is there a lot of pull factors bringing the market down?
I think the biggest support, not just in Australia but around the world, is low interest rates. People have to, invest their money somewhere, I mean, I guess most Australian savers are just finding out what life in low interest rates is, now they're getting 2 point something on a term deposit. But if you look at around the world, in Europe, most savers, they've been getting 0 for a couple of years. In America, they've been getting 0. So, and hence their markets are at all-time highs. So, one of the reasons, there's no doubt in my mind, that share markets are at these levels and supported is because of low interest rates.
When you look at what we've seen, and you've made the point, it's quite a rare situation to have interest rates where they are. And some economists, for example, Tanya Brown-White, when she was at Macquarie, would say she actually predicted this would just be a long, drawn-out economic cycle, and probably the markets will be a long, drawn-out bull market. Do you believe that that's what we're going to be living through, just like a long bull market that just goes up slowly rather than the big surges that we've been used to in the past?
Look, yes, I think, I'm not sure if you call it a bull market. I mean, the Dow's been at 18,000 for quite a while, and look, I think it's extreme loose monetary policy, and low interest rates will continue to support asset prices, not just shares but property as well. So that's the situation,
Well, you have the tough job. Your job is to pick stocks for your fund, Investors Mutual, and your QV
equities,
QV equities, your illicit investment company. And so your job is to find good value companies, despite the fact that the overall index might not be impressing. Is it really hard finding good companies, particularly when the dollar went from a level you might have thought was 76, 77, possibly going down, and bang, it goes to 81. Does that make it a lot harder for you?
Yeah, no, I think the other thing that's difficult, Pete, is the level of volatility, because, I've been, like you, in the market for a long time, and the problem these days is the volatility is exacerbated by all these short sellers and hedge funds, because, in the old days, I guess, if you go back 10 years ago, 15 years ago, if Woolworths had a bit of bad news, it would come off a little bit. But today it comes off, and there's these other guys shorting it as well, so it comes off even more. And then there's a rumour in the paper that Roger Corbett, that jumps $2. So you have this extreme volatility, and you've seen that in the case of Woolworths, you've seen in the case of Orica, where the stock fell when the MD left, and now it's sort of gone up almost 20% probably. So it is extremely volatile. So I think you've just got to be a bit patient. You've got to keep an eye on the stocks you like. You've got got to wait for the level where they start to look interesting again in terms of PE and yield, and that's the way, you know, that's the way we're playing it. So you just every day, you know, you never know which stock's going to move $1 or $2 either way. That's the way they have the land. And I mean, the truth is, and most viewers have got to understand this, is most people so-called investing in the market today. Well, number one, most of it's computers. You know, it's all these frequency traders.
Yeah.
Then there's all these
really speculators.
Then there's all these hedge funds. You know, and the truth is, the majority of money going in the market today, you know, their long term is the end of next week. You know, so that's where you, if you want to be a long-term investor, you've got to sit back, pick your stocks, wait for the level, and wait for them.
On Monday for the Switzer Super Report, I was looking for a bit of analysis that might stand the test of time. And I looked at CommBank, it was 96. And the day I wrote, it was 83. There's a pretty significant fall. Yeah. And the dividend was over 5%. And I thought to myself, well, look, history sort of says that markets like ours will pass their all-time high before they crash. It's possible history will be against us one day, but that's what history says. So I said, well, maybe over the next 2 years, our market might eventually creep to 6,800. We nearly got 6,000. So let's say 2 years, we go from where the index is now up to 6,800. That'd be about a 20% gain. Yeah. Now, the CBA only did 10% over that period of time, and we throw in 5% dividend for 2 years. Yeah. That's 20%, plus franking credits, 22. If you got 11% with a company like that over a 2-year period, that's not bad. No,
look, and as I said, again, with the banks, I'm not sure CBA is the cheapest of the banks, but look, it's the best quality bank, so you're paying a bit of a premium. The yield's just under 5, I think. Yeah. But I think, you know, Westpac's come back $6 or $7 in the last, you know, month or two. Okay, maybe $39 it was extended, but at 32, 31, you've got to say it's looking okay. Yeah. You know, again, you're not going to make, capital growth will be a bit of a, you know, I'd make 5%.
But if it's half the index.
No, I agree. So that's, you've got to, it's a bit scratchy like that, you know. It's hard to be effervescently bullish and say everything's a buy. No. But because I think you've got to wait for the volatility sometimes, pick your level, you know, as you say, 5-6% yield, if you're happy with that. The price, you know, who knows where it's going to go in the next year or two, but you pick your yield and you accumulate at that level.
You've also lived through a number of crashes. Is it part of your strategy to at least own companies that if you do get caught by a crash, they're companies that you want to buy at lower levels anyway?
Yes, and you know, you've seen enough crashes as I have, and the truth is, you know, in a crash everything drops, but the good quality stuff recovers. That's the truth. The froth and bubble, you know, all your speculative mining stocks or whatever they are, technology stocks go to sort of rubble, and all your good quality stuff goes down but then recovers. So yes, definitely, you've got to think about, do I want to own this stock for the next 3 to 5 years? Is there a yield, I think, in most cases that at least supports your income, you know, and then the capital grows. If the company's doing the right thing, it should come through over time. So, yes, definitely.
What do you think of Woolworths at the moment?
Look, Woolworths, I mentioned it before. Look, I started when it started getting down towards 26, 27.
You thought, this looks okay?
Well, look, the jury's out, to be honest, and we're going to go and see them very shortly to really try and get a handle. At the end of the day, you know, Woolworths is being priced as if the supermarkets will never turn around, as if Masters will never make a profit, and as if Big W will never turn around. Yeah. Now, look, it's possible that will happen, and every broker note I read says that's what's going to happen. So that's being priced into the stock a little bit. Now, the truth is it's not going to be easy to turn supermarkets around. Masters is some way off making a profit, but it's not impossible for those things to happen.
If you walk into a Woolworths
we're doing a lot of work. Well, they're good stores. It's still the largest. The question with Woolworths is, you know, their margins have to come down. And the bigger question, I mean, Aldi's there, Coles is competitive. So the environment has changed from 5 years ago where they were literally on their own.
Yeah. And Dan Murphy's is a good product.
The question is, can you see in the foreseeable future a quarter or two where maybe Woolworths sales will be higher than Coles? Yeah. Because if that happens, then the whole sentiment towards Woolworths will change.
And quickly, Telstra, what's your view on Telstra?
Look, Telstra, I think if you owned it, you'd hold it. I think around $6, it's fine. Again, the yield's 5%. The yield should grow in the next couple of years because of the NBN payments. Yeah. But again, it's not cheap. It's 18 times earnings, you know. So if you own them for a long time, you'd keep them because I think that yield is pretty safe. If you want to buy them, you'd wait for the dips around 6 or below, as we saw the other day.
Anton, thanks for joining us on the show.
Pleasure, Pete. Thanks
That's
very much.
Anton Tagliaferro of Investors Mutual. After the break, we'll meet one of the founders of a fast-growing online business called The Iconic.